Hello traders, and welcome to my video on the RSI Divergence Indicator. So a lot of people use the RSI indicator in the basic way, which is to wait for price to be in the extreme overbought zone or the extreme oversold zone. So basically, if price is high, like it is up here on the RSI Divergence Indicator, traders would look to sell because it suggests the market is overbought. Just as when the price is down the bottom here in the RSI indicator, suggests the market is oversold and traders would perhaps be looking to buy. Okay, so that's the basic way to use the RSI indicator. Another way it can be used is to avoid trading in overbought or oversold markets. So if you're thinking about perhaps taking a long position, you want to make sure that the RSI indicator is not overbought. Likewise, if you're thinking of taking a short position, you want to make sure that the RSI indicator is not oversold. Okay, but for the purpose of this video, we're going to be focusing on RSI divergence because this is a part of the RSI indicator that is often overlooked. Okay, and it's equally as important, if not more important, than the overbought and oversold zones of the RSI. So what is RSI divergence? Well, RSI divergence, if you look at the RSI indicator here, is when the RSI indicator is making lower highs, suggesting the market is losing momentum to the upside and we're going to see a bearish turn. Or if the market is making higher lows, it suggests the market is gaining upward momentum and we're going to see a bullish market. Okay? One of the key things when you're looking for RSI divergence is also to watch price action and how it reacts, because ideally we want to be looking for the opposite with the price action. So, for example, if the RSI is showing divergence to the downside, we want the price action to be turning upwards. And the reason this is because we want to find a favorable entrance point into the potential start of a new trend, rather than waiting to say sell low or buy high. You know, if you see divergence to the sell side on the RSI divergence indicator, but you also see that the market has already dropped quite significantly, then you risk selling at the low. Just as if you've seen divergence to the upside on the RSI indicator and the market had rallied up, you could risk buying at the high. Okay, obviously the RSI indicator can be used as well to gauge if we're in an overbought or oversold market scenario, which is an advantage to having this particular indicator, the RSI divergence indicator, which combines the best of both worlds. That being said, you can of course just mark the divergence off yourself. Like we have the RSI indicator here, just the default one that's included within I'm using the MT4 platform, but it would be in whichever trading platform you're using. The RSI indicator, we can also manually mark divergence to the downside, divergence to the upside. You can see the RSI divergence indicator just does it automatically with arrows here, green arrows for up divergence and red arrows for down divergence. I'll be honest, I actually prefer to mark the levels myself, just because I don't always find that the RSI divergence indicator would pick the right levels, but that's open to interpretation. Okay, for the purpose of this video, we'll just focus on the RSI divergence indicators signals, and I'm going to show you now how you can trade them. Okay, so the first thing we want to do is we want to look for a trend. So here we have the resistance level, nice triple top candlestick pattern, which means that this resistance is held up well. Okay, there's also a wedge pattern here. You can see that this support level is holding, and then we eventually have a breakout to the downside here. Some bearish candlestick patterns. I've got lots of videos on various candlestick patterns you can check out. So first, when we establish the trend, in this instance we can see we're in a downtrend. I'll just zoom in. Okay, we're on a downtrend. This is a 1 hour euro dollar chart. You can use RSI divergence on any trading instrument, Forex, stocks, cryptos, commodities, indices, whatever you like, and also any chart time frame. I personally prefer the 1 hour charts and above simply because they contain more price data, and I therefore find signals to be more accurate. That applies to technical indicators, price action analysis, support and resistance, candlestick patterns, etc. Okay, so we've got our downtrend here. Okay, now we're going to look for divergence to the downside, which we have. The indicator displays it both on the chart here, okay, and on the indicator here, so the lower highs, okay, lower highs, lower highs, lower highs from here, and also on the chart. Okay, so how do we then trade these? Well, as I said earlier on in the video, we're looking to sell here, so we're going to wait for a pullback. We're going to wait for the market to move up, as it does here. This is a nice pullback, and then we can enter on the breakout below, have a nice I think that's a 2 inside down candlestick pattern there, the bullish followed by the 2 bearish candles there, suggesting bearish momentum. And we also have a resistance level there. Bearing in mind this is the 1 hour chart, so that's strong resistance. And this wedge pattern's then formed, so you can see the price is consolidating in this zone, and we have a nice breakout to the downside. In fact, if we use this level of support, previous support, you can see that this is a strong level. It held up well here. It's been tested multiple times here, and then on that breakout candle there is quite a significant breakout. Lots of traders were probably keeping an eye on this level and looking to get in on this particular trade, especially as we had the rejection of this resistance level 3 times. So the RSI divergence indicator is giving us sell signals. We have the pullback, and that just confirmed our entry there. Personally, I would have probably taken this, or I definitely would have taken this trade without the RSI indicator. I don't think it actually added anything to this particular setup. And in general, I wouldn't use it as the go for placing a trade for an entry. I'd perhaps use it just to filter if the market is overbought or oversold, but even then it can be lagging. It may suggest that, okay, the market is oversold and the market's already headed back up, or it may say the market is oversold when the market is still gaining momentum and falling down. But if we just zoom out, I'll try and find a few examples of what I mean. To be fair here, the RSI is suggesting that the market is oversold, and after this run it does make a nice pullback. Okay, so it can be good for filtering trades. If you turned on your charts and you saw this trend here and you thought, let me sell here, not only would you be selling at the low, which would be a bad idea, but the RSI will tell you that the market is oversold, and there's divergence around here to the upside as well. So that would avoid you trading around here. On the other hand, during this pullback around this way, we have the bearish divergence. Again, red arrows, lower highs. So we could have been thinking around this area that, okay, the RSI is showing us the divergence to the downside. We're having a slight pullback around this area. So if you just timed your entry, whether you're using candlestick patterns, a breakout of this support level, or price pulling back to this support come resistance level here, here, and here. As always, you can draw your levels of support and resistance, and that nice breakout candle there would have been an opportunity to enter in this particular trend. Okay. It won't always be perfect, the RSI divergence indicator. There will be instances where if you're just using it as is, you will miss trading opportunities. But as you can see here, it can pick good entry points. The divergence there on the indicator is shown here on the chart, and that would have actually been a really good point of entry into this trend. Again, I have this nice support level and just a breakout underneath that level of support could have been your entry. We have the bearish candlestick patterns as well, and the nice downtrend continues. And throughout this downtrend, there's examples of bearish divergence throughout, which would have been, you know, good points of entry. Here's another one, for example, here even. And then as things did start to slow down, or has slowed down thus far, you can see the RSI is actually, you know, extremely oversold, which would be a signal that perhaps this trend is exhausted and we wouldn't want to take any more entries, or at least wait for this level of support to be breached. Yeah, so if you did get in on the initial breakout here, you know, there's profit potential of around 300 pips. Could have trailed your stop loss. My initial stop loss would have been here, okay, just above that previous high. And then as price dropped, I'd be moving my stop loss above the highs. As price keeps on dropping, I'll just keep moving it above the highs. Okay. Here, and then last one here, just to lock in profit on the way. So if price does turn around, start heading upwards, we've locked in all this profit. And you can always close part of the position on the way down, bank some pips, and just see how the move plays out. The last thing you want to do is to jump out of the trade prematurely here, you know, get excited because you've seen a breakout, and you know, that's why I don't like to use rigid take profit levels. For example, let's just say the stop loss was, I'll just move that up to that level there. Let's just say the stop loss was above this high at 20 pips and you had a fixed 20 pip stop loss and 60 pip take profit target. You would have been happy reaching your target around here, but you would have left, you know, over 200 pips on the table unless you want to re-enter on the way down, which you can do. As you see, there's ample opportunities throughout this trend for re-entry, especially if you're using the RSI divergence indicator to assist you. But you're going to end up paying your broker spreads, your commissions. You might get slipped out of trades, just extra costs, and you risk, you know, ending up selling right at the low. So it's good to get in as early as possible. I like to use a relatively tight stop loss and close losing trades early and let winning trades run as much as possible, moving my stop loss to break even as soon as possible. Okay, so that's RSI divergence to the sell side. If we just find an uptrend, okay, there's one here. Just remove these support and resistance lines. See, there was an uptrend here, and you could have been using the RSI divergence indicator for looking for bullish divergence on pullbacks. Okay, so we had some bullish divergence here and here. This was on a pullback area, so you could have been looking to get into the trade around here in this particular trend. You could have entered here. Still would have been some potential in this move over the course of 8 or so hours. However, we are quite far away from this trend line, so perhaps wait for a pullback closer to the trend line and then look to enter either you know, either on the breakout here or using the pullback in the RSI divergence, the textbook trade. There you see the bullish divergence and the RSI indicator indicating more momentum to the move, and we're in a pullback, so it all coincides well for an entry. Although that being said, keep an eye on the RSI because it is in an overbought zone here, despite there being some gas left in the tank on this particular move. Okay, so yeah, the RSI divergence indicator can give you some good signals. You will need to use some common sense. I wouldn't be taking the signals as they are. I'd be using further market analysis, specifically support and resistance, candlestick patterns, sensible money management as always. And as I said, I think the default RSI indicator that comes with your trading platform will be as good, if not better, for divergence, simply because you can pick the divergence levels that you want. Okay, for example, you might the indicator here is just picking this small area. Okay, whereas some traders might want to be marking this level here. Okay, it's just it depends if you're short term, mid term, or long term trading, day trading, swing trading. Yeah, there's just many different ways it can be utilized, and again, the overbought and oversold areas, just keep an eye on those. You might not want to buy when the price is too high, and you certainly wouldn't want to sell when the price is too low either. Okay, hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe for more.